Good evening, everyone. Welcome to yet another special clubhouse session with DIA. Our guest for today is Vishal Bhargava. He's a real estate enthusiast and he tracks all the on ground developments that are happening in this industry. And he does that by visiting various projects and meeting various management in the industry. He also writes a weekly column on money control and hosts a fortnight show with where he reviews various managements in this sector. During the session, if anybody has any questions, they can back channel any of the moderators, and the moderators will take up those questions with Vishal. Hi, Vishal. Thanks for accepting our invite, and over to you. Vishal, you are on mute, and if you press the mic button, then you can unmute yourself.
Yes, thank you, Utkarsh, for the introduction. Happy Republic Day to all. Uh, I'll keep the discussion focused at a macro level on real estate at a global scale initially, and then I'll move downwards towards Mumbai real estate in particular because that's the sector and that's the city I track closely. So, at a global level, real estate is the largest industry in any economy. The housing value of all property in this on the planet is about $170 trillion. US and China are 33, $39 trillion each. Uh, for India, we are close to 4 trillion. Um, Mumbai itself is close to 600 billion to $700 billion. That's the value of all property in Mumbai. Uh, how does the landscape of Mumbai real estate currently look? So, uh, it's a fairly smallish city in terms of space, and 25% of the habitable land is taken by slums. Uh, that's at a value ascertained to be over 3.5 lakh crore worth of Mumbai is encroached. Uh, because of that, one factor combined with the land scarcity that a city like Mumbai has, prices of land have pretty much followed a one directional phase. Uh, that's ensured that final home prices for home buyers has been high, which has put affordability in question for most home buyers. Developers, on their part, have typically been fairly reckless in underwriting of projects. There was a phase until not very long back where projects, to any neutral observer, would be deemed either unprofitable or would be deemed unrealistic. But those projects continued, and we landed in a situation as we did in 2020, 2021, when COVID was put the writing on the wall for everyone. Uh, for a developer, what are the key costs? So, on an average, uh, about one third of the cost of a project goes towards land. Uh, the bigger cost is our government taxes and levies. Uh, 30 to 42% of total cost for a project invariably get taken over by different forms of government levies. Uh, and that direction has continued because the housing sector has become a very big source of revenues for government. Uh, one change that has taken place for the industry in Mumbai has been that RERA has ensured that there is a higher uh, capital base needed, and if you don't have that capital base, you can't launch a project because approvals, the phase of approvals takes away enough cost and bandwidth for the fly-by-night operators to not be there. Uh, how exactly are the home buyer dynamics? This is where I get to the part of what a typical home buyer in Mumbai looks like. The average home price prior to 2021 was between 1.5 to 2 crore rupees. That meant that a home purchase needed an EMI of around 1 lakh per month. uh, assuming a assuming a 20% down payment at least. So, what sort of market size were we looking at before that phase? For that, let's look at the rental market. Uh, Based on data of 2019, only 20,600 households were doing deals where the rental registration and rent expense was over 50,000 rupees per month. This was basically the potential market that could move from rental to owning an apartment for a first home buyer. There are some gaps in the data because that data is for 1 year and typically agreements are for more than 1 year. But even as you make, even accounting for that buffer, it's unlikely that that number would be over 50,000 households. So you can broadly assume that the first buyer market for Mumbai is about 50,000 households. At its best point, prior to 21, the inventory was 110,000 units. That meant there was a steep reliance on replacement demand. Uh, Now, while I've given these numbers on home buyer market being only 50,000 households, please appreciate that the annual sales in Mumbai city itself are about 65,000 to 70,000 units. Uh, Two-thirds of that historically has been the resale market. The primary sale market is just about 20,000 odd units. Uh, so we've seen a phase where affordability uh, was stretched. It led to a downturn in the cycle, which continued, which is being addressed to some degree in the last year and a half. So one approach that has happened by developers is to not make cheaper homes necessarily, but smaller homes. Uh, Apartment sizes have shrunk by over 20% in the last decade. Uh, the smallest apartment in Mumbai is today the size of two Toyota Innovas. Uh, for This is a Delhi audience, so you'll appreciate that a 2 BHK in Mumbai, the average size has shrunk to a level of 622 square feet. This is a strategy that has been followed by most developers. It's been mildly successful for mid-level developers, but fairly successful for large developers. Uh, Now, just to get back to 2021, because since I kept reaffirming the point of pre 2021, 2021 is by any definition a landmark year for Mumbai real estate. Uh, we have seen registrations rise sharply uh, by over 60% at over 110,000 units. This number uh, needs to be kept in mind. The first 3 months of 2021 had the benefit of the stamp duty cut, uh, where we saw almost 40,000 registrations being done in those 3 months alone. Uh, in this number, there's been a disproportionate amount of number in the sales of limited players. So this 111,000 units that have been registered, uh, that's not been an industry-wide gain. Uh, Scientific data does not exist for this, but I would reckon one out of two developers would have done well in 2021. This 2021 euphoria has been captured by three factors: stamp duty cut for the first 3 months, the impact of COVID was not as strong as expected, and there were enough price cuts that developers were willing to offer. The model that is emerging now is fairly clear. We are working to a model which is CASA driven, CASA, which is a credible developer plus aggressive pricing plus small home plus amenities. So, credible developer, I don't want to confuse credible developer with the word branded developer uh, because there are cases of branded developers who exist who haven't delivered a single project. Uh, Credible developers can be there in their micro market as well as in the pan India, pan Mumbai level. Aggressive pricing includes ticket size of the offering. Small homes is where developers are looking to ensure that they are giving you a ticket size, but the profitability is still kept at a modest level. So the per square feet rate has not come down as much as the ticket size has, and amenities. That's the model that Mumbai real estate is working towards, where standalone buildings are not finding favor, uh, amenities buildings are finding favor. Uh, 2020 and 2021 were the phase where we saw major consolidation. Um, Developers who were not adequately capitalized or who had struggled enough were looking to exit the industry. Uh, I, however, notice after the benefits that government has announced, as well as the recent buoyancy that has come in the market, that we might see a phase where 2022 will see some degree of deconsolidation. Uh, that's because Mumbai is a redevelopment market. Redevelopment basically means, in simple terms, it means I'm taking down a small building and replacing it with a larger building. So if there is a four-story building and FSI is not consumed, I demolish it and do a bigger building. This does not need large amounts of capital because there's no land cost which needs to be paid upfront. So we're seeing a lot of smaller developers return to the market, which will lead to a phase where in 2022, 2023, the consolidation may turn out to be an year of deconsolidation. Uh, Large players are gaining, but uh, they're gaining at fairly unattractive deal structuring. Uh, One of the hazards is that most of the large developers are listed or looking to get listed, uh, where investor pressure is forcing developers to take on more and more projects. So that aggression is leading to deals, especially at the land level, not being as lucrative if patience permitted. Uh, the other model that is emerging is of developers from outside Mumbai entering Mumbai. Uh, the latest one is Prestige Estates of Bangalore, which is entered through a joint venture route. Uh, One of its partners is DB Realty, but for others, they have other partners as well. So, big players will look at doing deals which are at the JV and JD level. That's the model that will continue to go forward, barring select exceptions with certain developers. How does Mumbai real estate stack up when it comes to each developer? Uh, so broadly, when we're looking at a player like Oberoi, his USP is uh, premium quality, offering quality which is perceived to be unmatched. Godrej is delivery, uh, where the project will get executed and delivered on time. Suntech is a player where a strong reputation has been built with landowners, uh, which is why he can go in the outskirts of Mumbai and do large deals and create many townships. Lodha is nimble pricing, aggressive sales and marketing, so on and so forth. And of course, the smaller names like DB Realty, which Prestige is counting on, they have strengths like land acquisition and approvals. And a little known player like Uptown has a sizable land bank, which is its core strength. So that's broadly how the Mumbai real estate market is stacked up at this point in terms of numbers of in terms of registrations, in terms of how the product is shaping up, which I mentioned is smaller homes and amenities at an attractive ticket price, and the key strengths of each developer as I perceive it to be. So that's broadly my monologue. I don't know how much time I've taken on this, but I wanted to be short and crisp so no one gets bored.
Right. So perhaps we can take some questions from the moderators. Saurabh, do you have any questions for Vishal?
Yeah, thanks, Vishal. Thanks a lot, for these insights. So, you were talking about, some real estate. It has been more of a, regional business, and you spoke about some of the builders entering. So one question I have, and I'm seeing more and more South Indian builders, they're entering in North. One, because maybe they had better balance sheet, like Shobha has entered in North, and few North Indian builders have entered in South, like Ashiana Housing, they have entered into Chennai in old age housing. So first question is, what do you feel it takes for one regional player to succeed in another region? That is one question. And second, I don't know if you can point something on, do you have any views on old age housing in India? Like, in terms of financial economics, how do you see this business? And if you can provide any inputs on the old age housing concept, what it takes in terms of succeeding. Is it a real estate mindset which will succeed, or is it service mindset which will succeed? Even if you have experience from some of the international, some of the other countries, if you can address these two questions, please.
So the second question that you asked, I don't have a scientific number on this, but all the evidence at a global level suggests that it's a service play. So we will see it in the model, like we see management contracts for hotels, where developers can probably build it, but the management gets done by a specialized agency. Regarding the first question that you pointed of developers from one city going to the other, so different markets will see different players succeed. Like to a Noida market, a player like Godrej will succeed. Then we saw that happen with one of the recent launches because that's a market that lacks complete credibility. So Godrej can enter over there at a pricing which is not the cheapest, which by Noida standards will be on the higher side and still get a favorable response because there's a total credibility deficit there. Will somebody from Mumbai succeed in a market like Bangalore? I don't think so. Will somebody from North India succeed in Bangalore in a meaningful play? Because I don't see any big gaps that exist in the Bangalore market as such. Because you have specialists in every, the major aspects are fairly well covered. It's a market that has credibility. The quality aspect is fairly well covered. The financing of these developers is fairly strong. Mumbai's weakness is, I think, a bit of Delhi and bit of its own model. So, Prestige is just one developer. We had even Purvankara, which has had an on and off relationship with the Mumbai market. They launched a project in Mumbai about a year and a half ago. Didn't get the brightest response. Prestige launched recently in Mumbai. They also haven't got the brightest response, but uh, I think these companies uh, they have one USP that can make them penetrate Mumbai. One is that they know how to build offerings which are pretty standard in quality. Uh, to a Mumbai home buyer, uh, he has been fine tuned to just think delivery, delivery, delivery. Much like a Noida home buyer, that I at least got the apartment. The problem with that happens is that a Noida average home is a fraction of Mumbai home. This is where a Bangalore developer like Prestige can possibly do well. Uh, Somebody clears the ground for him, he constructs, builds, sell. I'll not be surprised if a player like Prestige was to become a dominant player in Mumbai if its relationship with its partners holds well, because its partners have some of the best land parcels in Mumbai. What the partners lack are credibility to develop and sell. Prestige can do that. I see a similar trend happening with other developers. There's DLF that is entering Mumbai. Again, I'll not be surprised if they do well because those are developers that are focused on construction execution. They need just somebody to clear the ground when it comes to land acquisition and approvals. So these players will do joint ventures, will do deals with local players, but the essence, the front end will be the players from outside who are credible, who can make a entrance and make a dent in regional markets.
Sure. Thanks, Vishal. And I have one more question, but I will let other moderators ask, and then again, maybe, I will ask after some time. If
Uh, Kumar, Saurabh, you can ask.
Sure.
It's not
Okay.
an issue.
So let us talk little bit about the commercial side of real estate. And in COVID, in last 2 years, everybody has been working from home, and there has been huge debate around. whether people will work more from home or for office. So especially Mumbai market, how do you see shaping up? Because I don't think it's a IT driven real estate market. So gut feel says that the commercial real estate should get back to normal once COVID is out. But do you have views on Mumbai commercial real estate?
So Grade A assets have held up pretty well in Mumbai. On the commercial side, like you mentioned, that it doesn't have the IT aspect, so we'll never see the type of growth that we're seeing in Mumbai on that side, like we're seeing in some of the southern cities. But Grade A assets in premium locations, they are still holding up in terms of demand as well as pricing. Uh, I suspect what will happen in the commercial side is that we'll see a lot of action happening outside Mumbai in the outskirts. So we will see markets like Noida, like Thane, Navi Mumbai, get more attention on the commercial side. Uh, on the core Mumbai part, I think that's more or less covered. We're not even seeing too much commercial development take place, barring one giant project that Prestige has embarked on. So I think in terms of absorption, I don't think on the commercial side, Mumbai player is someone to be really looked at seriously, because we'll not see the type of growth uh, in Mumbai that we are seeing in some of the other cities.
Sure. Thanks, Vishal. That helps a lot.
Can I go next?
Yes, Sarkit, please.
Yeah, so two quick questions. And first of all, thanks, Vishal, for the overview. So I have two questions. One is, can you unpack RERA a bit for us? So in terms of what real benefits it brings, so that this sector becomes more transparent. Second, what are the limitations of RERA? So that's one question. And second is, I was looking at some of the say presentations from leading people in this space. So they used to say that there are two ways to look at returns in this space. One is rental yield, and the second was capital gain. Now in say in commercial, it's 8 plus 2. 8 is more like rental yield, and 2% is say appreciation. Whereas in retail, in residential, it's reverse. It's more reliant on capital appreciation, and say rental yield is around 2%. So have these numbers been updated in the recent past, or what's the current number, so that we get a sense of how to look at some of these sectors? So these would be my two questions.
Okay. So on the first part of RERA, so broadly, RERA's well, approach is that it's making things transparent for the buyer, and it's ensuring that uh, you can actually initiate projects only after a certain stage of approvals. What what's the difference from what it was earlier? Earlier, you could launch a project at any stage. Now you can't launch a project at any stage. You can't just take over a plot and next day start launching it with the board and try to get investors. So that is the one big key change that RERA has introduced. Earlier model ensured that anyone and everyone could become a developer, because the barrier to entry was far too little. You could start up, you could raise capital from customers, investors, start the project. Now you can't do all of that, because you have to reach a certain advanced stage where it requires capital. Uh, on the other side for RERA is that you get a lot of details about each project which were not available earlier. Uh, that was partly for regulatory reason, partly because of the approach that developers had with customers. Earlier, the approach that developers had with customers was more of a it was an approach where they were at a pedestal and the customer was down. So because the demand supply mismatch, they could dictate the terms. Um so right now, if you go to RERA, you will be able to see the stage of each project where it is at, right from excavation, well, whether it is the water tanker has been installed, as well as the type of bookings that have happened. Uh, Historically, one key problem has been that developers used to always mislead on the type of demand that used to be there for a certain project. Now, RERA makes it incumbent on them to highlight the bookings that have been done. Uh, so, what's the downside in this? So, one key downside is that it is more voluntary, especially once project reaches OC stage. You don't have to make any updates. So let's assume a tower is has got OC, 30% is still unsold. The developer is, it's not incumbent on him to supply all the details after that. Secondly, the veracity of the data that you're putting out. Unless somebody doesn't file a complaint regarding the developer that this data is wrong, uh, RERA in itself will not be investigating everything. So, is RERA the perfect solution? It's not, but it's a big change from where we were earlier. Uh, I suspect uh, if things continue in the direction that it's going, we'll possibly see some more progress. But I think we have come very close to the peak in terms of how the behavior of developers ought to have been. Uh, regarding the second question you mentioned about rental yield and capital appreciation. So I think I don't want to sound like the enemy of property brokers, but anyone who's now talking about capital appreciation is just is being very optimistic. Uh, Property brokers have the mandate to tell you every year that it's the best time to buy and capital appreciation will happen. But I can assure you, no serious developer believes that prices are going to rise. Okay, uh, be it the top tier, the mid level, nobody's expecting prices to rise. Everybody has understood it's a volume game, so you have to build, you have to construct and sell and get out. Regarding commercial, so I think that model is getting tweaked because of a lot of different businesses that are coming in. There are things like one is the model of the co-working business model, where certain amount of business is coming from there. The other is there is a lot of interest coming in from different ways of funding these assets, uh, from the routine plain vanilla business of owning to systems like fractional ownership. Uh, I noticed that the rental yields as such have not changed. They have remained in line with rentals, and capital values have remained pretty much in sync to be at that level of 2.5% for housing as well as for commercial. I do see some change happening at the warehousing level. At the warehousing level, where we are typically used to seeing higher rental yields, there I think we have seen a bit of a spurt because of fractional ownership, because everybody wanted to get into it. So those assets in some of the deals that I've noticed have hit close to double digit. I'm not sure it will sustain. But on your broad point of capital appreciation and rental yield, that has been largely unchanged. The market typically will figure it out. Rents will move in sync with capital values. We might see an exception in 2022 on the residential side because of a lot of stock that will be out of the system because of redevelopment. Uh, because of the government incentives that were introduced, we'll see more redevelopment happen in Mumbai in the next 12 to 18 months that we have probably seen in the last 5 to 6 years. That means many buildings will get demolished, which were earlier used for rental. uh, that means the other properties that exist, they will be able to command higher rents. That's one phase that is already beginning to unravel. 2022 year, I think, will be probably one of the better years for landlords and homeowners who want to give their place on rent. So we'll probably see rental yield for this year, for 22 or maybe the early part of 23, be high, but it'll come back to the normal levels once supply of housing kicks in again.
Thanks, Vishal. Just a quick follow-up. So you talked about, there's a distinction between branded developers and say credible developers. So are there say specific metrics, or say if we as investors, so let's take that, branded developers means those say that are listed entities. Now within that, if you have to find out credible developers, so are there say resources or say matrices say from RERA website that we can refer to really differentiate between, within the superset of branded developers, which are the credible developers?
So, credible developers. So, RERA gives you some degree of data regarding the past track record of each developer, because they'll tell you that which are the projects that have been done by the developer previously. Then it becomes more of a qualitative decision where uh, you have to figure out as a home buyer or as an investor that how is the execution. That typically happens by dealing with the customers of the property who are staying there of the historical projects. So unless you don't do that part, and that is a part that I'm noticing more home buyers do now, where they go to the previous projects, try to see from customers that what was promised to you when you bought, has it been delivered? If so, how much of it has been delivered, and how has the customer experience been? That's where I think players like Oberoi score very heavily, uh, because the customer experience that he's managed to provide, or the perception that he's been able to build, is that he invariably provides for most customers uh, as much bang for the buck that very few other developers provide. Uh, Godrej, on the other hand, uh, while their strength is delivery, I'm not so sure if there is anyone who buys a Godrej product and is dazzled when it's executed. But their strength is delivery, that you will get the apartment. Um I mentioned about players like Huptown. They've built a very strong brand image with landowners, which is why they can embark on large townships on the outskirts of Mumbai and not be focused on Mumbai, where the game is getting uh, tougher and challenging. They can do bigger scale outside. Um, for a player like Lodha, I know some of you would have read adequately about him and some of his experiences, some of the experiences that customers have had with him. Uh, to be fair, I'm not as pessimistic on Lodha as many other customers are. I'm sure there have been mistakes. But at the scale at which he's operating and the sales he's delivering, there is something that he's doing right when a developer is able to deliver so much. So yeah, so eventually you'll have to look at the type of projects a developer has done. If somebody as a investor or a buyer is looking at it, you have to be very clear that a developer who's doing an affordable housing project, he might be credible for an affordable housing project, but can he deliver a luxury housing project? And if you're looking to go for a luxury housing project, you have to be careful on that. So yeah, so there are various metrics that are there that somebody has to judge. But my single point whenever I judge a developer or a deconstruct developer is I always ask a home buyer or a resident that how was the experience when you had with the developer regarding the promises when he made to the time he delivered and after delivery. I think that in itself is the biggest solution or the biggest indicator of understanding a developer.
Thanks, Vishal. Really helpful. Yeah.
Vishal, one more question, because you were talking about affordable housing, and I remember 2, 3 years back I was talking to somebody in sales in real estate. I think 2017 was the time when affordable housing was much more talked about. And what they said me at that time is affordable housing in terms of demand it will be there, but looks like nobody has figured out how it will be profitable. So, what is your view on affordable housing from a profitability perspective? If I'm wearing an investor's hat, are affordable housing companies profitable enough, to invest?
So affordable housing, I think the model to make it affordable housing is to make it small. It's as simple as that. Uh, so to make it affordable, because it doesn't work on a per square feet basis, so it's not affordable at a per square feet basis if somebody was to look at it. But the ticket size becomes affordable. So the model that affordable housing now has become clear to everyone is that we just have to make compact homes. Uh, because the more if you make it compact, the ticket size becomes lower and it becomes quote unquote affordable, which is why we see this phenomenon of prices being 1 crore, 1.2 crore, 90 lakhs, 50 lakhs, 60 lakhs. At the introduction, I mentioned that the smallest apartment in Mumbai was the size of two Toyota Innovas because he did it at 186 square feet, and he said it's a 45 lakh apartment. Did it work? It did work for various reasons, but the initial response was still strong. So affordable housing means you'll make it compact, and by compact you'll make it lower for the home buyer while retaining your profitability. It will not be the most profitable in terms of per unit, but in terms of the entire project, the number of volumes you'll be doing, it will be reasonably profitable.
Okay, okay.
Satish, you may ask.
Yeah, thanks, Utkarsh. Yeah, I have a question. Hi, Vishal. I have a question regarding the next gen office space because as of now, the office spaces used to hold people, but the next gen office space is going to host only machines like cloud infra or some automated environment. So, what is your outlook? As of now, to the best of my knowledge, there are three big players getting into this area with the huge capex plan. They are Hiranandani in the name of Yota. Then we have Adani. The third one is Ascendas. But the kind of these buildings require a specialized expertise that may provide building infrastructure to a particular specification along with a very unique communication as well as power infra. So, do you see any auxiliary industries or special people getting into this area? Thanks.
So I think since you mentioned Hira and Nani, I had a chance to look at his data center that was launched recently on the outskirts of
Correct.
Mumbai.
Yota, yeah, yeah, that's correct.
So
Yeah.
yeah, so I think this is a very nascent phase. It will be tough to give a view on its long-term sustenance. I am noticing many developers embark on taking up such industries. At the same time, I'm noticing many developers do a wait and watch because they don't know the entire fallout of COVID-19, whether it's sustainable or not sustainable. So it's a bit tough to take a long term call on this, but because of the capital requirements that such projects and such assets entail, it can only be done by a select few, which is why the names that you mentioned, they are the large names. You will not see some small developer, small player getting into it. What we will probably see are specialized agencies to run it, like I mentioned about the previous case of old age living or even hotels where they're management contracts. I think we will see developers do what they do best, which is develop and construct and leave the management to experts. Uh, Now, whether will their own company develop that expertise? It's possible, but it's possible only by a very few select set of players. I don't think the biggest player in that specialization will come from the developers. It will be somebody outside because it's more service driven, it's more technology driven, where the mindset of most developers today is not in sync with that. So I will reckon that the top players in this space on the management side will not be developers. It'll be somebody outside of that.
Okay. Do you have any uh, clue or something who may get into it? Will it be a services company, IT services company, or a mix of real estate management and services? Because
But,
even this technology infra not only contains technology, right? It has
mhm,
specialized power as well as communication management also, along with security. Even the physical security guidelines are pretty stringent for these.
mhm.
So, are you seeing any integrated play here? Means
So on
anybody who can get into this
So
role?
frankly, this your guess is as good as mine. It's tough for me to give a view on which developers may enter the space. They could be from actually pretty much anywhere. There are lots of subsets to to this industry, and anyone can be nimble enough to move and make a robust presence in that space.
Thanks, Vishal. Thanks a lot. Yeah.
Um, can I go next?
Yes, maybe.
Thanks, Vishal. Very helpful for laying this down. Um, do you see consolidation happening as the market matures? And I mean, there are already few examples of it. But do you see this trend continuing in the Indian real estate space as you would compare it to, let's say, outside of India, or even just China, for example?
So consolidation will happen in certain markets. I think on the commercial side, it's pretty clear. Consolidation is the way forward. On residential, I think some markets will see more consolidation than others. Like the market, Delhi NCR is of course seeing that happen in a meaningful way. Bangalore was to an extent reasonably consolidated previously as well. Markets like Mumbai and Pune is probably the most fragmented market in India. Uh, I think we will see consolidation happen where maturity of the market has reached a certain stage. That's I think the word you used, mature, was appropriate. It has to reach a certain degree of maturity. Um in a market like Mumbai, do I see a lot of consolidation happening? I don't, uh, because plot sizes are small. So, will a top tier developer want to be interested in a 1,000, 2,000 square meter plot? No, he will want large plots. Large plots invariably don't exist in Mumbai in too many locations. Godrej has one massive land parcel where it's been developing. Oberoi has its land parcel where it's been developing. But on a broad scale, two-thirds of the market is redevelopment. It's focused on small plots. So we'll not see a lot of consolidation happen in Mumbai. But other markets like Delhi NCR, Bangalore, Pune, we might see to a certain extent. But yeah, I think consolidation, the peak is far away from us. Uh, Also, I think we need to appreciate that each micro market has its own local favorites. So it's not as if a Godrej or a Oberoi can just take up a project at any location, get a customer response. Uh, because if we are to go with the premise that RERA has ensured that delivery will more or less likely happen, then the edge of many developers goes out, because a buyer will go to a top tier developer because he knows first and foremost he'll get the apartment. If RERA and the evolution of the industry comes to a stage wherein delivery is more or less sorted by most developers, then it'll be tough for a large developer to enter a market, charge a premium, and get customers. We've already, in fact, actually it's a good question you've asked, because in the last 3 months we have seen uh, three credible developers launch, all three listed uh, at prices which were elevated, and they've got a poor response. So consolidation needs evolution and maturity even from the developer side, not just from the customer end and from the regulatory end. If that happens, we'll see some degree of it, but I don't think we should expect a stage wherein the top developers will take even a one third of the market. And that will also be a stretch across India.
Got it.
Vishal,
So,
one more. Yeah, may I go next?
Yes, yes, sir, please.
Yeah. Vishal, one more question. So, like the last big real estate cycle which happened, between 2003 to 7, if we see that cycle, that was primarily driven by, investment as a purpose for real estate. Right now, the market is, if it is picking up, how do you see? Is it more like a end user demand market, or do you see any traces of real estate as an investment kind of, sell also happening?
So, this recent recovery that we have seen is almost fully led by end user demand. Investors who have gotten the handful, they are basically going for distressed assets. A project is stuck where the developer is saying, I'll give you 10 units or 20 units at a heavily discounted rate. That's where it is happening. And that's also happening very selectively. So, this move that we have seen is completely without investors. It's end user demand. And I think if anybody walks into a project, one of the best experiences I have, just when I go to projects and they ask me why am I there, I sometimes say I'm an investor, and I can see that the salesperson themselves are in sort of disbelief. They can't believe that a person has come there to invest.
Okay, because in Bangalore, I have seen like brands like Prestige, many investors. I mean, there are certain companies which are investor favorites, and I was just looking if the demand is coming from that side. One more question I have on the redevelopment market of Mumbai. There are some small developers who are trying to get into Mumbai redevelopment market, and it could become something huge for them. But from a risk perspective, what are the risks which are there in redevelopment market? Like Kolte Patil, I think they're
Yeah.
already there, and
Mm.
they are seeing a future for themselves in redevelopment. What are the risks which they could face and it could not work for them, if you can highlight?
So the biggest risk is the type of deal you do. with the landowners, that is the residents of the building who currently stay there, who you are telling them to vacate for leaving the building, and thereafter which you demolish it. That's one big due diligence point where developers have to be cautious in terms of negotiating with landowners. You mentioned Kolte Patil, and I think one of the hazards of being listed on the exchange is that you have to show additional new projects, and in that I think some developers have been just completely reckless. Uh, means uh, I can often, just when I see some of the feasibility reports and the type of pricing estimates that they've done, I can say it before the project is launched that it will fail. The second point is that you have to know in each market who are you looking to cater to. Many people look to enter Mumbai, think it's a large ticket size, a large per square feet market, and they build products accordingly. There have been learnings where people have adjusted to a reality where they know that those days of large ticket size are more or less over. You have to be lower ticket size. Uh, so if you ask me, the two key points is that you have to know what your costs are, including with the landowners, and you have to know who is your customer. That's most important, and I think it will be very very competitive now, because a developer doing it 3 or 4 years back would not have seen as much competition as we're going to see in 22, 23, because the extent of redevelopment activity that we are seeing, we'll see a lot of supply come at the same time, and they'll all be competing with each other. So the redevelopment journey of many developers over the last 5 years, it'll be very different in the next 2 years. There'll be a lot of competition, and I hope most developers have taken into account what sort of product and what sort of customer they're at.
Thanks a lot, Vishal. And if I can ask one more question, so as an investor, I was looking at companies who have done really well in real estate and try to study US market. There is a company called NVR Inc. and this company has been credible. Like if we look at the history, it has been a 150x plus bagger, and even post the 2008 recession, the track record has been very good. In fact, 100 bagger post recession. And what I saw, they work on a very different kind of model where they buy options of land contract, and basically they try to get rid of the whole balance sheet and inventory risk. So in India, why those kind of models are not possible? Is it because of regulation, or is it that nobody has tried? And do you ever see a possibility of those kind of models coming in real estate, which make some of the companies much better investment option?
I think that will happen. That's a very good point you have raised. I think that model will happen because there is a need in the real estate ecosystem for investors to come in. Deal structuring, I think, has been pretty plain vanilla for most part. But the model that you mentioned, I haven't looked at this model that you mentioned. But I'll not be surprised. I don't think there are too many regulatory challenges that are there for it, to my understanding. But in case if they are there, I'm sure there are ways that the industry collectively can find to ensure that they become more investor friendly.
Thanks, Vishal. Thanks for answering all the questions. Thank you.
Vishal, you had recently written an article on a real estate project called Magarpatta City, wherein like developer offered like shareholding to all the farmers who contributed the land to the project. So, do you foresee such kind of models evolving and becoming more prevalent across India?
So Magarpatta is one of its kind, and it's basically farmers giving their land to a company, and the company issuing shares in return to them. 123 farmers who cumulatively provided about 430 acres of land. To be honest, I don't think it's a model that will see too much replication, uh, because a farmer mindset is very difficult. I want a difficult, very different. You need to be someone very well linked to understand that ecosystem, which is why the Magarpatta city model worked well, because even the person who headed that company or who heads the company was from a family of farmers. He knew everyone. He was very well respected, so they trusted him. Uh, At a macro level, I'm not so sure if that level of replication can be happened by too many entrepreneurs. Not too many farmers want to become developers, like in the case of Magarpatta. And the trust, I don't think really exists that much between farmers and developers. Too many have had a tough experience. I'll put it this way: I see greater chances of slum rehabilitation projects happening than farmers coming together and building projects.
Right. So I also received another question on my back channel regarding like where do you foresee the real estate, residential real estate yields versus vis-a-vis commercial real estate yields. So do you foresee any like changes in their attractiveness?
So, as I mentioned, we might see a degree, an opportunistic move in the next 2 years because of so much stock. And this I'm talking specifically Mumbai, but at a broad scale, I think uh, with the cost structure that most developers have and the pricing that has become attuned, I do not see too much change happening on the rental yield front. I think we're in this phase; it'll remain where we are, with few exceptions, both in terms of locations as well as in terms of developers.
Right. Thanks a lot. Do we have any more questions from the moderators?
Can I ask one question?
Yeah, Deepak, please go ahead.
Yeah, thank you. Um, Thanks, Vishalji. It was good start actually. I have one question. There is one realtor. I am not going to name him. In one of the small towns where he has a large a land bank, and that is becoming like phenomenal. He has been giving phenomenal results rather.
Mhm.
So, do you see any sorry, no, you are working out of Bombay, sorry. Bombay-based real estate companies having such large land banks that can be leveraged. So, do you see such things happening? Or do you see
So,
any company like that?
see, there's Lodha that has a very large land parcel on the outskirts of Mumbai. It's meaningfully out on the outskirts of Mumbai. Uh, will we see others get into it? We are seeing Suntech do take big large land parcels in alliance with landowners and developing and constructing. There is certainly a market for it because these micro markets and locations are those where there are very few credible builders. You invariably end up buying from a person who is known within the circuit or who has a reputation which is not the most inspiring. So there is certainly a market for these locations to be in. It has to be a volume game. You can create a different experience for that select micro market. So yeah, I see developers taking on new locations. Um, One, because that is where you will get scale of activity, uh, and in that, for large developers, that is where the big opportunity lies when you do the 50 acres, 100 acres. So just to give you an example, on the biggest projects that are being undertaken by most Mumbai developers is in a market well on the outskirts of Mumbai, in a location like Panvel, which is close to the new international airport, where Godrej is doing 100 acres plus, Hirandan is doing 600 acres, and other developers are doing all 50, 70, 100 acres. So that's where we get scale. That's where there is a market that lies unaddressed, where you can make decent amount of margins because you'll be giving a differentiated product or a product that the audience so far has not seen.
Thank you.
So Vishal, on similar lines, so there is a company called DB Realty, and every bull market there comes a thought that the market cap to land bank is very very attractive, and I saw your tweet where you mentioned some deal between DB Realty and Prestige Estate. So any thoughts on such players, And also maybe a sub question to that will be say, how do we really get a sense of the value of the land bank? Are there say repository or where you can get a understanding of the market price of these land banks?
So the second question, unfortunately, no. There is no credible database that at least I am aware of that provides valuation on land. Uh, the reports that come out once the deal is happening, generally are on the higher side. But I don't think there is an agency that does land bank valuation. Regarding your point of DB Realty, so yeah, I think two companies in Mumbai that have the best land banks are DB Realty and Hubtown. It's a sort of a pity that both of them don't have the best reputation. I think DB Realty has, to an extent, rectified or is looking to nullify that by moving from being the land acquirer and staying as a land acquirer. In the bull market, unfortunately, many developers or many landowners thought they could become developers. Um, that's the mistake that many of them made, including DB Realty. Uh, I think that is being addressed by most of them. I think most of them now know that their core competency land lies in doing land acquisition and approvals. So even like Godrej, uh, their largest or one of the large SRA projects was in line with one developer called Omkar, who started out or whose claim to fame was doing the land acquisition for slum rehab. Then he got into development himself, realized that's not the direction for someone like him, and went back to doing slum rehab land acquisition. So I think developers and land acquirers have come to a good understanding among themselves whose core competency lies where. Uh, I don't know about the valuation aspect of it, but I don't think there are too many people who have the skill set that DB Realty has in terms of land acquisition and approvals at this point of time. It may change maybe 3 years from now, but I'll be very hesitant to say that there is anyone better than DB Realty when it comes to things like land acquisition and approvals at this point of time.
Thanks, Vishal. So, I one and maybe taking a cue for one of your answers. So, you talked about warehousing might see reasonable yields compared to say other ones. So, any players that you can talk about who are prominent in this space or are making serious headway?
So there are a lot of these initiatives that the fractional ownership players have done, where you can invest. I think it starts with as less as 5 lakh rupees and goes to 25 lakh rupees as the minimum investment amount, where they pick up an asset where the asset is already leased to a key player. Could be anyone from Amazon to Snapdeal or whoever. Uh, because invariably the lock-in period for such deals between the warehouse and the tenant, they are for large periods, so you have good visibility in terms of your rental yields. So they're not large institutional players, but there are enough number of fractional players. There's one player called Strata that has a specialization in warehousing assets, where it identifies assets which are priced uh, reasonably, where there is a good tenant, where your rental starts coming from day one, because it's just from one owner to the other owner moving. The tenant remains the same, and you rent start from day one. So there's Strata, there is MYRE, which is, but that's in commercial assets. But I think on warehousing, the dominant player is Strata.
Okay. Thanks, Vishal. And a quick one, another one. So one space, which saw the maximum impact of lockdown was, say, players like Phoenix Mill, the retail shop side of the real estate. So now they are now also trying to come back. So any new trends that you are seeing, especially in terms of the kind of deals that they are having with shop owners, like what is it completely say fixed rent or is it more revenue linked? Because that could be a trend that could be we could watch out for how they play on this unlock theme and come up with models that are more sustainable, in fact, end up giving them a bigger share of the pie if economic turns around, especially the retail consumption. So any thoughts or trends that you are witnessing in this part of the real estate story?
So I have not witnessed too many new trends in this space. It's pretty selective. Deal structuring is, I think, it's almost like a case by case basis. I'm not seeing any trend that's taking place in that regard. Will that change going forward? I don't know. I think this is a uh, very different business where trends get formed with quite a bit of difficulty. So I'm not so sure that even if a trend was to emerge, it will be something that will be long lasting. It will probably be one of those case by case basis, and they'll get back to the old framework that existed pre COVID.
And what would be the say the more dominant framework? What is say if you talk about the pre-COVID framework? So what would be that dominant framework? Is it more like minimum guarantee kind of a yield, and then say X percentage of sales, or is it X percentage of profit? So any color that you can provide us just to help us get a sense of what are the thumb rules when it comes to estimating the yield from such assets.
So I think the dominant model will be the old one, wherein you'll just do a fixed model, a certain fee. The next most popular model will be the minimum capital one. So yeah, between the two, which one does where? Frankly, I don't have that much of an idea on that. But I don't think we will go beyond these two models in it. The nature of the business is such that the evolution or the structuring of a third model seems unlikely.
Okay. Thanks, Vishal. Thanks.
So
Vishal, I
Vishal,
have one question. Sorry, since Saketji was mentioning about trend, there is a very, very small trend I am noticing that, people are willing to move away from the city, instead of paying such high costs. They're going for electric vehicles and all, which are actually, becoming economical for them. So do you think some certain areas or certain localities in Bombay are going to have this over like 5 year period, and that's a trend that we need to watch and identify those companies?
So we will. I think we are seeing a trend which is moving away from the city and going on the outskirts. In of course the southern markets, it's more prominent. But even in a market like Mumbai, we are moving towards going on the outskirts. Not mainly because of COVID, but because the offering in these outskirts is a lot more promising. So, like the biggest deals that a player like Godrej or and Oberoi are doing now, we are seeing them enter markets like Thane. Oberoi's Thane project will probably launch in a month or so from now. 60-acre land parcel. It won't be the biggest, uh, but there are sufficient number of players who will be able to get a certain amount of scale plus value of it. Now, these markets, Thane, since you spoke specifically about Mumbai, it's about its average pricing ticket size is about 50% of Mumbai. But the scale you will get there will be substantially higher than the Mumbai market. Uh, Most players who are there are working with land parcels in excess of 20 acres, 30 acres, 40 acres, the large ones. So yeah, so work from home has accelerated that because those are the markets where you can provide a more cohesive experience for the affordable population of Mumbai, because you have schools, you have amenities, you have space, you have greenery. It's a planned township. So yeah, so I think that the trend is moving away from the core city, uh, unless cities like the core cities don't regroup themselves and make it more livable and more affordable. I think that trend will continue. That people will prefer after a certain stage in their careers and lives to move into to the uh, outskirts of the core cities.
Thank you.
Vishal, you mentioned Uptown is like one of the biggest landowners in Mumbai. What's your take on their delivery schedules?
So Uptown is so delivery schedules. They have currently three projects that are that are on their radar. I think we will possibly see the first delivery of one of their projects happen by April or May. Uh, Maybe if it gets stretched a bit further with the OC permit, maybe June, July types. So I think the problem with Uptown had been credibility, that both at the promoter level as well as the delivery record for home buyers. Uh, if it goes on track and if there is delivery that happens from June, July, uh, I think it will be a company to certainly take note of. Uh, because development is often the easiest part in the construction journey if you have good land parcels. Uptown has the undoubtedly, in my view, some of the best locations in Mumbai where they have land parcels. So for them, if they are able to deliver and execute, and even if they can't deliver and execute themselves and they do it the DB way by getting partners, I think it's a model for them that will work. Currently, in many of the projects, they're doing it themselves. Uh, is that the best approach in my point of view? At the affordable housing level, maybe yes, but if they're aiming to do luxury housing, I think they will be well advised to do it with a key partner who has a certain degree of reputation in delivering premium and luxury offerings.
Right, thanks a lot. And in 2021, we saw a large increase in the number of like property registration, and it's been said that that is because of the stamp duty cut. So, how much of this increase in registration will you attribute to the stamp duty cut, and how much to the like the cycle, the change in the cycle of the industry?
So I think I would attribute at least 50% of the numbers that we have seen are due to the stamp duty cut. Please appreciate that the rule is that after you book an apartment, you can register the apartment uh, up to 90 days. Up to 90 days. So if you've done a registration, if you've done a deal in March, you could typically do registration 3 months after that. So you got the stamp duty rebate, but you did the registration in the month of June. That of course had some changes because of the Delta wave that happened in 2021. So I would attribute at least 50% of that to stamp duty cut. Uh, I would also attribute a big degree of credit to how developers have responded. I think they sensed that there is momentum at this point. They gave offerings that were that were that were very lucrative for home buyers, and they closed deals. I think I have not seen a phase where I saw such degree of aggression among developers to close deals. Very aggressive. If in one line, if I was to put it, I don't think too many developers let price come in the way of closing a deal.
And do you foresee uh, these state property tax intervention by governments continue in 2022 as well?
So 22, I don't think so. I think they've given us some degree of extension for select projects beyond December 31st. I don't think they will extend it beyond what has already been done. At the same time, I recognize that this is an administration that is very friendly to the construction industry. So I will not be surprised that even if 2022 nothing happens, if the industry was to start struggling uh, at some point, an helping hand could be provided.
Great, great. But we have opened the floor for the audience as well, so you can raise your hand and ask the question, Vishal.
Vishal, I have a couple of questions. Uh, could you please explain the landscape of the housing finance companies, if you could? And the second question that I had was, in one of your answers to a question, you mentioned the peak is very far from here. Could you explain? Could you please expand on that a little bit more for the audience? Thank you.
The peak I mentioned was in terms of the consolidation aspect for the industry. Uh, I think I'm noticing a lot of a lot of commentary from various segments of the ecosystem talk about consolidation and consolidation happening at a rapid pace. Uh, I'm not noticing that on the ground. Uh, there is consolidation, but it is not happening to the degree that is being stated. At the same time, we have to understand that construction, the real estate industry is still an industry where barriers to entry are not very high. So, in a way, when the market picks up, uh, the lesser known players, they can get back to the ecosystem. The lesser capitalized players, they can come back to the system. So in a way, uh, the two things can't exist for too long. If there is market buoyancy, we will not see consolidation. Consolidation will happen when the market is struggling. So if we are to go with the assumption that buoyancy is there and it will continue, as I suspect that most players are betting on now, we will not see consolidation the way many sectors of the commentary are stating it to be. Um, this, of course, I'm talking from a Mumbai specific level. Uh, Certain other markets, they may be sustained consolidation, but it will take quite some time. The mid-level guys who have built a reputation and are not very well known outside the micro market, they still have their own position. So they know the market better. They know what the product has to be done. They're able to give better deals. So I don't think consolidation peak is anytime around the corner. The large developers have to work. They have to plan better. They have to go with forecasts that are attainable in this flurry of project addition. I've noticed some very reckless addition that's happened by some large developers at terms which I I think they will struggle to make uh, well even a meaningful profit. So I think consolidation happening slowly. I think it will. We'll probably see 22-23 not. We'll see a deconsolidation phase, and after that we'll have to review that whether the guys who have come back into the ecosystem have they come back to become long-term players, or are they going to get back to the old habits that they earlier had.
Great, thanks. And on the housing finance, Vishal?
Frankly, on the housing finance side, I don't have that much knowledge, so I don't want to give a comment on that side of the business.
Sure, thanks, Vishal. I appreciate it.
Yes, Vasuman, you can go ahead.
Yes, Vishal wanted to know if there is any listed company exploring real estate space in outside major big towns, smaller cities like in South India or Central India. Cities, I mean, typically like Bhopal, Indore, Tiruchirappalli, or is there any major companies planning to enter into such smaller towns?
So, major company, I don't think there's any major company that's going to those markets. They're very small markets for a large developer to spend too much energy on. We will have where they have had historically some experience. They'll want to continue there. Like a company like Uptown has a presence in Gujarat, they will continue being there for some point. There'll be a company like Arihant that has done some work in Rajasthan. They will be able to continue on that over there to some degree, but their foray will remain where the prime metropolitan cities are. I don't think there's anybody that comes top of mind to me that is exploring markets that are tier 3, tier 4. Even Bhopal, I think the 3 or 4 developers that are there, some Paras developers who's doing some luxury offering there and has quite a few projects. But I don't think there's anybody of some meaningful size that exists that is going to these sort of markets.
You don't see any investments coming to those towns in terms of big developers?
Uh, by large developers, I don't think they will invest in those markets. They have their hands full with the offerings that they are in control with. That's also, I think, because many of these markets, tier three, tier four, they have room to make themselves more investor friendly. I don't think they yet have the imagination. I've had a chance to visit some of the smaller cities in the last year and a half amidst COVID, and I think they just don't have that sophistication to make sure that they can become more investor friendly, both from a retail investor or from an institution or even from a developer.
Right. Okay. Thank you, Vishal.
Yes, Deepak.
Hi Vishal. So I'm Deepak. So what would be your suggestion for the builders entering Mumbai market from outside? The things they should be cautious about, is it optimistic, and which sector they should target on? Is it affordable or large housing? And what's your thoughts on that? So some are very grace level. Thank you.
So, for a developer coming from outside, I would recommend first up that they go with the first project that they want to build. Go with an offering that is very differentiated. By differentiated, it could be on the product, it could be on the pricing, depending on the strength of the developer. Like in case of, just to give an example, if I was in the shoes of a Prestige Estates, which launched a project in Mumbai recently, I would have spent more time in channel partner integration. I would have spent more time in designing a product which is more in tune with what Mumbai is accustomed to. I think the configurations that Prestige is coming up uh, are much larger than what Mumbai is used to. That is because they're coming from a landscape like Bangalore where things are larger. But because they've come in with a large configuration over here and they have priced their product at not the most aggressive level, you have seen a ticket size which is not very attractive. So if I was in their place, I would have done configurations which are a bit smaller. I would have done better channel partner integration, and I would have done a better launch, uh, the better launch price to get momentum going. I understand the point of view of some developers. When you have just 230, 235 units, you don't want to really sell out too cheap because it's a very small project itself. But for the first project, I would have, if I was sitting in their shoes, I would have done that. I would have ensured that for the first 20, 30 launches, 20, 30 units, gone with an aggressive price, created a big buzz about who am I, let channel partners do a lot of talking on my behalf, and get the customer in by giving a ticket size which is meaningful, not as elevated at its current as it is currently.
Thank you, Vishal.
Uh, Vishal, this is Srinivasan here.
Hmm.
It's kind of, it has been touched before, but I want to ask it specifically, right? So there have been many things about buying a home or buying the shares. So in your thing, suppose I'm not into buying a home for myself. I suppose I'm not that. I just want to look at the home, the entire industry as an investor. What would you say is a better way for an investor to make use of this industry?
So, well, that's an interesting question. Uh, so, if you're buying property with the plan of capital appreciation, you'll be disappointed. Uh, at the same time, when I hear from many of my stock market friends and I notice the type of rise that has happened in stock prices of some companies, I don't know how many, but some of the companies, uh, they seem to have done a lot better than what an investor in property would feel like. So, I would reckon that the approach to do is to not, as an investor, I will strongly discourage people from buying property. If you're buying property today to make money, you're more likely to get disappointed. Uh, Things have caught up in a way where uh, returns from it will be far from inadequate, far from adequate. So I think that leaves then other varied options for an investor. You either go in through the stock market route, you either go through the fractional ownership route, you either go through distressed assets funds that are currently emerging through a cohesive arrangement. Yeah, so I think you can explore any aspect except buying the property as an investor. I don't think that's an avenue that I will recommend to anybody.
Thank you. That's actually a pretty strong, strong message. I'm sure. Hopefully, people will hear it. I do, in my day job, I do have to talk to quite a few kinds of investors, and there is still a strong belief that in real estate is a good investment, particularly flats, right? And which we try to discourage too. I try to discourage too. Hearing from you is quite useful. Thank you.
So I will just say this, that I had done an observation from many of from one particular uh, broker, which is also a consulting firm, but it's primarily a broker, uh, where every year since 2016 it's been telling it's the best time to buy a house. And if anybody had listened to that broker at any time from 2016 to 2021, he would be down at least 20%. So I will encourage people who read newspapers and read some of these consulting firms and slash brokerages into giving suggestions to buy property for investment. I think we should take that with a truckloads of salt.
So, how much more time do we have, Vishal?
We take in the next 10 minutes. 10 minutes salt.
Yeah, yeah, sounds good.
Uh, Utkarsh, can I?
Yeah, please go ahead.
Yeah. Thanks, Vishal. The question is around the two companies you mentioned, DB Realty and Uptown. And I was just checking their performance, stock performance. They are up some crazy 4x in the last 1 year. I'm sure, and from your style of expression and communication, you are not really reading stock performance of companies, rather the prospects of firms in terms of meeting market requirements. But broadly, Uptown and DB Realty, what kind of prospects do you see for them, given that they've had such a good appreciation in the market in the last 1 year, going forward, at least in the near term forward, maybe 1 2 years? Thank you.
So I think both of them, from what I have looked at some time in the recent past, have a very low market value. So uh, I think they both have similar challenges but are approaching it differently. So DB Realty, great land bank that they have, now doing joint venture with a powerful player from South India, who will more likely, who will for all practical purpose, unless they do something completely untoward, become a key player in Mumbai. Uh, so they have decided that we will do the groundwork for them, and then we'll take a share of the entire proceeds. Uh, Huptown, I think, believes yet that they can sell on their own name. Uh, I think to some extent their optimism uh, may be justified if they start delivering projects. Uh, Memories are unfortunately short, and I don't have a negative view on either of the two. I'm more than happy to see both the companies rebound and rebound strongly. Uh, but if Huptown was to start delivering projects, then confidence will come, and then many of the projects which they have not been able to embark on for various reasons, they will start commencing. Uh, the only thing I would recommend a player like Uptown is that if they are doing luxury projects, they will be advised to do it with a partner who has that reputation in delivering luxury projects. It's a very different audience. Not many have been able to crack it. However good a location you have, uh, luxury is a different ball game. It's a very different customer. So affordable housing, normal mid-level housing, they can still do well once they start delivering. if the premise is there that from June July they have delivered, I think confidence will start coming back in Uptown as a developer.
So what's like the conservative land bank size they have, Uptown and DB
Sorry,
Realty?
I had just gone out of the room. Just to conclude that point, of the two, you are more confident in the way DB Realty is approaching things because of a partnership model, and Uptown, will eventually get into its own, and so you kind of fancy DB Realty over Uptown, right?
Uh, so I won't say exactly what you said. I think both of them have potential to rebound. DB's approach is a more modest approach because of the experiences they have had. They, I think, have figured out that the correct approach is to tag along with a large, credible, branded developer and then monetize the land bank that they have. Uptown operates at a different scale compared to DB. Like DB has prime locations and few of them, but Uptown's land bank is enormous. Uh, so uh, if Uptown sticks to the model that luxury we will do with somebody else and affordable and mid-level housing we do it themselves, I think Uptown is certainly a player to keep an eye out for.
And the unstated thing is, you obviously see good steam left in both these firms in the next 1 to 2 years.
Oh yes. I think both of them have land banks that will keep them comfortable. DB at least has land bank for the next 5 to 7 years. Uptown maybe for the next 10 to 12 years. So yeah, I have no doubt in that. The problem with both the companies is not land. So they have to address the other things. If they address the other things, they have good visibility for both the companies beyond 5 years or so.
So Vishal, just to conclude this point, if there was a stock investor side to you,
Hmm.
you'd definitely fancy these two firms in the, let's say, 2 to 3 years time frame.
I this is a public platform, so I want to be cautious in what I say. Uh, I would, I think both of them are companies that are worthy of considering that they will rebound. Between the two, which one has more potential to rebound? Of course, Uptown, because they are more they're taking it up upon themselves. But they also have the risk that if they don't deliver, then all the land bank will fall flat.
Thank you, Vishal.
Any conservative figure, Vishal, you have about the size of the land bank that these guys have?
So, cumulatively, I wouldn't know, but let me just say. So, Uptown has, uh, I think it will have, so it's one of its biggest land parcels is a 150-acre land parcel, which is partly in Mumbai, partly in Thane. That's the biggest land ownership which they have with a partner. Um, they have 10 acres here. So I wouldn't have a specific number on this. I would say that Uptown would have close to 200 acres under its belt, along with its partners. I want to emphasize that because in many of these land banks that they are there, they're not the only owner. They have partners as well who own the land. DB Realty, I think they have BKC a couple of prime plots and that Mahalakshmi. I don't know the exact size of all of them cumulatively, and they seem to be adding quite a bit from what I gather as well. So yeah, I mean, but their land parcels, like I mentioned, they are possibly at the prime of prime locations. Uh, you will not see them have land parcels, in the distant suburbs. You'll have them at prime locations in Mumbai.
Vishal, can I ask you about Ajmera? Do you have any view on the company?
So Ajmera, they frankly have two big land parcels. One is Vadala, where they have a 100-acre project. They've done, I think, about 55, 56 acres currently. They have the remaining parcel that they're doing. In the immediate foray, I'm told that they will be doing about 7 acres. Uh, they've managed to upgrade in their construction philosophy. Um, they seem to be pretty nimble and attuned with the reality on prices and product. The other one is, of course, a 66-acre land parcel they have in a location called Kanjurmarg, which is on the eastern side of Bombay. That has, I won't say it is the cleanest land parcel, so I don't know when those projects will unravel. But even the 40 acres that they have at Vadala, which is their bread and butter, uh, that I think will I don't want to give a number to each one, each building that they have, but there's 7 towers that are lined up over there, with a sizable following and value. And I think they're also a company I would look at favorably from a company that can emerge and make a name for itself. It's been in the shadows because it's been focused only on one location, and that one location was not the most prime location until a few years back. But now they're managing to get into their game. They're making the right noises. I think I'm told they were very investor unfriendly until a few years back, but I noticed reading a few of their interviews. So I'm guessing they're getting back to become investor friendly as well.
Thanks, Vishal.
Um,
Yeah, can I go ahead, Utkarsh?
yes, Manish.
Yes. Hello, Vishal. Thanks for doing this. I had only one question. Any views on Arihant Superstructures Limited? Thanks.
So Arihant is primarily focused on Navi Mumbai. Uh, that's within the outskirts of Mumbai. So I will put it that Arihant possibly will be a developer that should have been a lot bigger than it currently is. Uh, I had the opportunity to meet the promoter a few months back, and he's done good amount of delivery, very good addition of projects. He has a very strong reputation among landowners. Uh, I think that's partly to do with the nature of his dealings with them. Um, and it seems to be working on a philosophy that it wants to create a product for everyone, but not at the same location. It will do a project at point A at a certain offering and price. It will go to point B. It will change that product, change that pricing, uh, and point C, and so on and so forth. And yet, if things are not working for them, they will be nimble on pricing. They will change pricing. They will sell. They will work like a factory. I think that's the word the promoter used when I had a chat with him as well. So I think he's a player also to watch out for because he's adding projects heavily. He's managing to sell. He has good brand. He has a good brand image over there. One is because of the work he's done. Two is because we don't see too many branded developers in Navi Mumbai yet. We are seeing that happen. Godrej has launched something there recently. L&T did it a couple of years back. So we are seeing that change. But until then, Ariant is a heavyweight in the market that it is, and it recognizes that this is its market. It does not want to branch out into many other places and punch above its weight. It wants to stay in Navi Mumbai and try to dominate it. So I think, as a philosophy, that I think is probably among the safer bets to take on a company.
Thanks.
I guess this was the last question that we had.
Okay.
Do we have any more questions?
So if we don't have a question, I can articulate one, Utkarsh.
Yeah, yeah, please.
Yeah. So for the Vishal, you come classically from the industry and analysis of the industry. I don't think you add too much of weight to see how the performance or the market cap of those companies is. But if we were to, and you're talking to an audience which is an investor community, stock investor community, are there any frameworks that you have for which companies pass the filter and which will eventually be in the list and the reckoning for investment? Because there's a wide portfolio of companies, different segments, territories, their end customer use, etc., etc. So if you can help with the framework, that'll be helpful. Thank you. And I just saw these companies, more or less all these companies. So many of the good companies mentioned today have gone up 4, 5, or 6x in the last 1 year. So how do we hone in on the ones that we should finally invest in? Thank you.
So, okay, let me start with the biggest names. If I was to, so I've spent some time on your side of the table uh, when I was an analyst quite some time back. So, uh, as a person who was to evaluate a company, I would evaluate as to one, at what terms are they entering a project, and what terms are they looking to exit a project. I think the mismatch often is happening because there is too narrow a gap between both of them. Uh, Too many projects are entered too high and they are sold too low. So I will look at companies uh, from a profitability angle, the ones who don't mind, uh, you know, looking at avenues which are slightly off the beaten track. So, like for example, like a project like Godrej. Let me just give examples so you'll understand the thought process I have. Uh, Godrej has one project in Mumbai, which is Godrej RKS in Chembur. Uh, it paid a reasonably steep amount for that parcel land, 2.2 acres land parcel, some part of it encroached, but they paid about 250 crores. The pricing of that they're giving for a customer is close to 45,000 rupees per square feet. Uh, it's got a soft response, and then it's picked up to a certain extent when they made certain changes in pricing. Uh, when you go with the framework of that degree of acquisition cost, it's unlikely you will make a remarkable profit unless you are able to price it that well and get demand for it. Now, for a variety of reasons, a player like Godrej can now not charge a steep premium for its projects in Mumbai. It can do it in some markets like Noida, but in a market like Mumbai, they cannot look to take pricing of the kind like say Oberoi can do. It's differentiated product, different audience, so on and so forth. Um, at the same time, the companies who are willing to experiment, uh, one is Suntech. It's experimenting. It's done well. It's managed to do satisfy customers to a good degree in markets which are underserved. To the other side, where there is extensive land bank which can be exploited, which is where the names like DB, Uptown, and so on, Ajmera come in. So each one has to be viewed on a very case by case basis. I actually go with the assumption when I judge a developer, I ask them only two questions that make me determine where what his philosophy is. I ask him who are the top three developers you rate and why, and which is the building you would like to stay in outside of your own. In those two answers, I have realized that you get to know more of a developer than any other question that he talks from a long term perspective of the business. uh, Quarter by quarter isn't the thing that I look at, and I think that's something which you guys look at. But I've understood that if you are able to get an honest response from a developer on those two questions, you have a good understanding of what he is thinking about. So I remember asking the promoters of Ajmera a few weeks back, and he spoke repeatedly about Hirandani developers, uh, of the experience that he provides to customers. So we want to emulate that. I think even with Suntech, he had a similar view. So you can understand the philosophy that each one has as to what thing they want to emulate by when they give the responses. So I don't have a structured metric on that. But I think if you ask those two questions to any developer and you get an honest answer, I think you'll be able to know where the developer is likely to head.
Vishal, you're being, as they say, right? You're being too. I don't know whether you're being kind to be cruel or cruel to be kind, but asking a competitor to name, his whatever his best peers
Hmm.
is probably a very sensitive question, and most people would not want to give that away. I mean, if you see the IPOs today, all the DRHPs of the companies, they say we have no peer companies. I mean, they start with that assumption, and then you have to go with it. So I mean, it's a credit to your experience and background that you're able to pose this question. But for the lay investor like us who don't do the fine slicing that you have done in terms of understanding the entry into a project or exit into a project, just the bare metrics of how the companies are fared and viewed is insufficient. Is that what you're saying?
So okay, um, so I think the point that you make is valid. That the peer we have no peers. I think probably that's a bit ambitious there to read. But I think for developers as an industry, because it's very promoter driven, you have to know what the promoter personality is. And I think even the con call transcripts that I read, uh, some of them, of course, say things which are completely unrealistic and just for the gallery. Uh, but I have found in many con calls that they are reasonably candid as to where they want to be, barring the point of price rise. I think the only one point where I think call developers constantly exaggerate is that we are expecting prices to rise from. But I think that's more a business statement to ensure that things are in their favor. So I can't frankly give you a metric on how to judge any or judge a developer. I think it's all going to be on how the promoter is, how his track record is, and how actually the one other point is that how he's preparing his successors, because many of the companies are now seeing the next gen takeover. So it's very important to know whether the promoter is giving adequate leeway to the next gen to take over and chart their own path. In that I see many problems happening. That I must confess that many developers who bring their sons or daughters into the business, they ensure that they are pretty powerless while giving them the tokens of CEO and MD. So yeah, I think we have to just wait and watch, and we have to just try to understand the promoter. It's very promoter driven. For someone like me who looks at projects, interacts with managements, uh, I invariably reach the promoter last, because I first see his projects and then I meet the developer to understand that is the promoter's personality coming out in his project. So I probably am in a different position than you are, but I think my answer to judging them probably remains the same. You have to just look at how the promoter is, how his buildings are actually. If you can just see how a building is, like when you see a DLF building, you can see how the promoter is. If when you see an Oberoi building, you can get a good sense of what Vicky Oberoi is. When you see Arihant, the developer's project, you can see how Arihant is. Same with I think which was Ajmera. You can see the transition. If any of you all have gone to any of the Ajmera, the township, you will see how the product has changed in the last 10 years when they started to what it is now. Uh, and you can see that there are newer imprints being built of a new generation coming in, their philosophy, their thought process.
Thanks, Vishal. If you just want to finally name
Hmm.
which would be the best or top five companies in your consideration set,
Listed or unlisted also.
primarily listed. Okay, listed five and unlisted five.
So, unlisted five, I would rate among the top would be Hirandani Oberoi. I'll mix it up based on who are my top picks. I would say Hirandani Oberoi. They're able to consistently provide a customer experience that others are not. So, and charge a price which is substantially higher than the competition. Um Lodha for the pace at which he's able to add projects and deliver them, while being nimble on pricing. Three, that's three. Um, and
That's fine. If he would.
Raheja, no. I mean, unlisted, of course. Raheja has to be at the top. Uh,
Okay.
yeah, and there, of course, a few of them, few Raheja, because the company has been sort of spun off into different family companies. So Raheja will be, and it'll be on top with Oberoi and Hirangani for me. And then will be Godrej will also be there. I'm not a big fan of Godrej's offerings, to be honest. Um, I don't think there's any product of theirs which I truly like as a project, uh, barring Planet Godrej. I think all the others are so-so. So I'll not. In case if I was a buyer or investor, I would not be buying a Godrej apartment in any of its new offerings. That among the listed ones, again, I think very differentiated belt. Each one has its own strength. I think Arihant at the small scale is somebody to look out for. Um, um, a really adventurous investment would be guys like DB and Uptown. Um, and Oberoi and Godrej, my friends tell me their stocks are through the roof. So I don't know entry time, exit time, and all these things. But yeah, so I think the ones I would think are overrated, if I can put that word, uh, in terms of delivery among the listed space. Actually, no, I think there's two Publica platforms to give that view. But yeah, I think those are names I have.
Listed as Arihant, DB, Uptown, and what are the last two?
Um so see, Godrej Oberoi, they have their own strengths,
Okay.
but I'm told that their stocks have risen a lot. So I don't know entry, exit, and all. But
Okay.
I think Oberoi this year will be a big year for him because he's going
Okay.
to do a big launch in Thane, which is 60 acres. He will have uh, hopefully an OC for one of the most expensive projects of India, a luxury project at Prabhadevi, 360 West. And he's done sub launches at his Goregaon property as well. So I think we will see 2022 be a good year for Oberoi. And yeah, Suntech. I think Suntech is also a player to watch out for. It has a strategy which is very different from the rest. It goes to markets where nobody else is there, and is able to get in with minimal capital upfront to the landowner and take steep premium from the customer. So they are the opposite of what I normally say. They have a very low entry cost and a pretty high exit one.
Thank you so much. The final thing is because I'm based in the south, you haven't
Okay.
named any south names. Any reason?
So South, frankly, I don't track that closely.
Okay.
It's of course a market that is doing very well, that much. But from South, the company I'm tracking a lot is Prestige because of its foray into Mumbai, and that's a company actually. Prestige is also a player to watch out for because I think in the next 5 years they will probably be a top five developer in Mumbai, given the scale of activity that they have. So if there's one player that will break into the top five in Mumbai from outside, it will be Prestige.
Thank you very much, Vishal.
So Utkarsh, I have a question in the back channel. So Vishal, no, any thoughts on proxy plays within real estate where you are seeing good traction? I'm sure there are a lot of them that have run up, but any that comes to top of your mind?
So proxy, you can look at the contractor business, where there are a few that are there. JMC projects, which is there. It's a group company of an unlisted player, Kalpatru. They invariably tend to get a lot of contracts of Kalpatru. Now, because the company is struggling at this point of time, I think JMC activity is also a bit restricted. There is Capacite projects, which is there, which has created a very strong brand image for itself among developers. Most of the large projects that I see, the contractor is Capacite, including Oberoi. Earlier, the contractor was L&T. Now, for I think all its projects, if I'm not wrong, is Capacite. And yeah, so I think among the contractor side, these two. Um, On the other parts like tiles and all, then I think it becomes a different space only. Who are the ones to look out at? There is one company which I constantly get asked about, which over here I think has been missed because it's too early. That is, I think Birla. Uh, they have a big land parcel uh, which they have launched recently. It's also a play uh, which I think can work well uh, if they address some of the initial hiccups that are there. Because this sort of a project in Lower Parel will not be replicated with the land parcel that they have. So at scale, it can do something which very few projects can do, not just in Mumbai but in India. I think the only peer I can see with this sort of location will be in prime location, will be like a DLF in prime parts of Gurgaon. So so I think that's how it's broadly stacked up for me.
Thanks, Vishal. Thanks.
Vishal, if I can sneak in one last question. Your views on India Bulls and Embassy.
So uh, now, of course, we have to just see the unraveling of the merger, when it goes and how it goes. India Bulls, good assets, struggled for a variety of reasons. Uh, Embassy can take has good cover post the transaction. So, again, I'm not saying from a stock perspective because I have no idea about valuation and swap ratios and so on and so forth. But as a company, I think the best of India Bulls is yet to come uh, once this thing gets sorted out. I think it's a company I will look at very seriously once the transaction is executed and projects get their momentum.
Thanks, Vishal.
So with this, we'd like to announce the end of the session. So thanks a lot, Vishal, for taking the time out for today's session. I'm sure everybody got to learn something new and found the insights shared by you extremely useful in understanding the sector. So on behalf of everyone, thanks a lot again.
Thank you, Utkarsh. Thank you. Thank you to all your members who attended the session and fine set of questions. Often, I think just when we talk to people outside Mumbai, we tend to sometimes get a chance of looking at things from a bit of a distance from the questions that are coming through. So I enjoyed responding to all the questions.
Likewise,
Thank you,
I'm
Vishal.
sure
Please,
that
please, please come frequently.
Okay, thank you.
So thanks a lot everyone for joining in, and we'll now close this room. If anybody wants to say anything to Vishal, please go ahead.
No, I think thanks Utkarsh for arranging this, and thanks Vishal for giving a very different perspective on this sector, because as investors we are used to just numbers, but I think the qualitatively some of the thumb rules or models that you have I think helped us come across. I think this is fascinating, and best of luck to you, and hope you keep sharing such insights. Yeah, thanks a lot, Vishal.
Okay, thank you. Thank you.
Thank
Yeah.
you, Utkarsh. Well put, Saket. I hope Vishal keeps coming back to this room from time to time and
Yeah.
educating
Wha-
us. Thank you.
Yeah, thanks, Vishal. And then one specific thing I liked very much was the difference between branded and creatable, right? So I think that can be applied to many other discussions that we have also, but a good term. Thank you.
I think the value sector experts they bring to the table is very, very different, especially for, we investors. So, big thanks, Vishal. Thanks for your time.
Thank you.